something that are required to be a good trader. So keep that in mind. Um, Given my professional background with things, the reason I have these are for much longer and, to be quite frank, much more expensive trades. So I need to have that extra verification on stuff. But the best part is that it also applies to just a stand. Like if I would have had this stuff when I first started trading, oh my God, would have been awesome. But
Right.
then again, you have to have the understanding behind it as well. There were some questions about how I do risk management, how I keep my wits about me within the trades. Also, the commentary from over trading on things, and I will get into that. I typically work on a 3 minute, 5 minute, and 15 minute time frames when it comes to intraday moves on that. And I'm also one of those traders that as I put on a trade and I'm waiting for the trade to work out, that is what I like to call teaching time on there. So please feel more than free to ask questions. If I do not have the answer for that, I probably know somebody that does. And so if I cannot answer it, then I'll get back to you with the best possible answer I can. Um, Other than that, I think that Jeremy, did I miss anything? I think that kind of covers everything as far as general housekeeping, right?
Yeah, I think you got it.
All right, cool beans, cool beans. All righty, so let's see main chat. There we go. I can see that. There
I'll
we go.
probably throw on one thing real quick. 1 second. I like to throw on the disclaimer. There we go.
Yes. Yes, past performance is not indicative of future results. Nothing here is a trade recommendation or anything like that. You're responsible for your own account, your own actions. And if you decide to go full tilt when you're not ready to go full tilt, that is 100% your fault, not mine, Jeremy, the Bullish Bears, or anybody else involved but you. Not
Never,
even your broker's fault because you're the one who clicked the button. So keep that in mind.
never
Oh,
go full
yeah.
tilt, but there's other words for that come from the movie line. So
Yeah, no, we can't say that one. I'm not
no,
getting
no.
canceled today. I've been very good. I've been very good, man. But yes, and again, you'll notice I am a lighthearted person when it comes to it, but I've had people comment about it too. Man, you switch very quick. If you like, if we're talking like this in a very, I'll say natural way, this is how. Ask anyone that's ever met me in person. I'm the exact same. Hey, I mean, me and Jeremy, we were sitting there. What was that, man? A few months ago or something like that. We're having coffee. By the way, if anyone's never met Jeremy in person, the guy is freaking tall. Like he's like, I'm putting that out there, man. I'm putting you on. You are freaking tall, and it's cool. It was fun, but
I
that's the thing is that having natural conversation and then being able to switch quickly because you already have a thesis. You already have a
right.
trading plan. You already have everything together. And as you're waiting for your setup to come through, you should be able to go from a nice general conversation like this to bam. All right. I'm in my zone. That is not something it's not something you're going to develop even within your first year of trading. For me, I think it was like my third year of profitable trading before I was able to do stuff like that because you're looking at so many other things. You're talking back and forth across the desk to traders and stuff. And then you go, oh man, there's my setup. Okay, bam, disconnect from all of the outside third party impacts and go directly into your chart, your style, your system. For me, I typically run about 3 to 5 trades a day per asset class on there. So, ESNQ, 3 to 5 trades if the setup is there. Gold, copper, SPY, QQQ, all of those. Like I say, it depends on how many I'm watching for the day. Today, we do have some interesting things that are popping through. So right here, if you've never seen this before, this is Trading View on this. I think we actually have a overview of Trading View on the BB blogs. So make sure to check out the website and go check out the blog there on the Trading View. I like Trading View for the aspect of it has one of the largest communities for tailoring the platform to yourself. You'll notice I'm one of the few traders out there that I actually use tan charts. That's a really quick way to tell whether or not who's up there. A lot of people use white or black. Anne Marie, she uses blue, and that one really threw me off. But then that kind of goes back to some of the original screens as well. I'm one of like 4 or 5 public traders I know that actually uses tan charts. So that's a quick way to know whether or not it's me. Another aspect of it, you'll notice my system's very clean overall. I have a couple small things here. As the years have gone on, I have become a much more, I'll say, refined. I don't want to use the word lazy, but the thing is with such a large community of modders out there, there is probably something that you can paste onto your screen that will allow 70 to 80% of the work to already be completed for you. So right now, this green bar, I have marked out all of the times that I like to trade on there. So you can see this is London session right in here, and you can see when we start to get some nice movement through that, I'm able to do that. We can see, okay, when that shading's done, boom, my time rule has been met. And if I'm not in a trade, I do not enter a trade in no man's land in there. I still want to see the price action because it's relevant, but I'm not going to enter a trade. Right now, we have the 9 o'clock hour. For me, I like 9 to 11. That's kind of my entry zones on top of stuff. My optimal time is 10 o'clock on there, and the method behind that kind of madness is you're allowing the first part of the morning session to go through. A lot of your news is being absorbed, and a lot of the not necessarily rapidness, but impulse of the market is then out of the way. Typically on Wednesdays we would have the oil report at 10:30, but because it's a short week for MLK Day on Monday, oil reports tomorrow on that. So that is something to keep in mind. We look here at the calendar and we can see oh, okay, cool. Yeah, you guys can still see everything, right? Just want to make sure.
Oh yeah, no, it's all good.
Okay, yeah, it gave me a little message there saying it had paused something. Alrighty, so looking here at the calendar, quick econ calendar, we can see already industrial and man numbers came out. Here, now we've got business inventories, housing, retail coming out on that. This is going to be a big one here. Williams speaking is going to be interesting to say the least with that. And then Beige Book will have us. Lagarde, I talked on Lagarde speaking before. For those unaware, right now, the World Economic Forum is happening in Davos. There's a lot of conversation around AI affecting the global markets, not just financial, but affecting global markets when it comes to worker production, innovation, and even legitimacy as far as IP rights or something like that. Who owns the IP rights if an AI comes up with a solution to something? Is it the people that license the AI? Is it the people who created the AI? So there's a lot of stuff going on with that, and that's something to keep in mind as we move forward on things. So when Lagarde is speaking, when we're seeing commentary and news articles from those events, we will see some jitters within the market. Typically, Lagarde affects the ES more than the NQ, but right now our RVOL, which stands for relative volume, is actually elevated on the NQ with this versus being elevated on the ES right now. I'll be looking for that to flip later on. So what do I have up on the chart right here? So we can just go ahead and give everybody an introduction of what I have up. If you were a previous student of mine or with the Bullish Bears beforehand or anything like that, I was a big advocate of TTM, stands for Trade the Markets. John Carter's known very well. He's kind of popularized that, and some of his crew there helped modify it a little bit to bring it up to modern standards. And I love the TTM, I love RSI, I love all of those, but in my full-blown opinion, that has kept me as a profitable trader for 9+ years, or no, actually longer than that. God, I'm close.
It's been a while.
Yeah, no, I'm sitting here thinking, my God, you lose track of time. It's been 10, 10, 11 years. Yeah. And indicators are just a way that gives you that little bit of confidence boost. Let's say, I don't know, you're playing varsity and you're getting ready for that meet, and you need you need that oof, that good push to get out there. Well, that's the coach right behind you. It's like, no, this is a good move. Um I have developed myself over to the years to where now I am the coach on there. So as far as indicators and stuff, really the only thing that I ever keep up is ATR, which stands for average true range, and that is set on a standard 14. I do not use a 3 period ATR. I use a standard 14 ATR. And for those unaware, average true range is exactly that. So if you're on a 5 minute period, it means over the last 14 5 minute periods, this is the average move that we've seen. Why would that matter? It puts things in perspective. And as I discussed before, it allows you to know the M1, i.e., the velocity of what's happening with the market right now. So if you ever hear me say, oh, we have an elevated RVOL and elevated ATR, what does that mean? We have more participation in a broader swing of range. The typical ATR on the ES is about 5 points, give or take. There was a point, I think it was late 2022 on there, that the ES actually had an RVOL of like 17, and that's excessive. Like it was absurd. It was trading like it was the Nazi, and
That's nice.
yeah, that was a wild time. God, that was a I look back and I'm like,
Yo,
Morning.
I'm so sorry to interrupt, Creed, real quick.
yeah,
Um, hey, it's me, Kevin. Just want to say hello. Having I just want to update you guys, the community. Creed, first, I appreciate you for being able to stream and jumping in. I've been listening the past 10 minutes, and awesome stuff. A little bit of a family emergency. My mom, we brought her to hospice last night, so
Oh
I'm gonna
man.
have to be focusing on that a little bit. But I will be trying to get back with you guys, obviously. But don't think I'm just disappearing.
No.
family first, man, and that's that brings on a big aspect to the only reason we trade is for family and the freedom to be able to do things. So Kevin,
That's right.
absolutely, man, if you need anything, please reach out to me. I'll do what I can on my side of stuff, and we wish all the best to you and the family, man.
Appreciate you. Appreciate you all.
Same,
Great
man.
community. Great group.
Anytime, we got you. Just
All right.
for that, Kevin.
just real quick.
Thank you. All right. I'm gonna talk to you guys soon.
Hey man, we'll speak soon. Take care.
Peace.
And just to reach out to our YouTube friends, going live today with this, just kind of bringing back one of our, well, let's call him the legacy OG, Mr. Creed here. He's one of the original Bullish Bears from when it all got started. So welcome him back into the fold is an honor for me. Also, you may notice if you're tuning in to us on YouTube, just doing this today. I know there's a few of you watching, but I've turned the comments off. It's hard for me to manage all the comments and stuff because I'm actually trading right now. So welcome, and just kind of giving you guys a peek inside of what we're going to be doing from here on. Thanks again. We'll see you soon.
Yeah, I'll say YouTube land. Thank you to you guys as well. I hate to say it, but I will not be looking at the YouTube comments right now.
Yeah.
Like I say, and you guys got to understand is that we do not trade as a hobby. This is how I feed my family on
Same.
this. I mean, I've got 2 Belgian Malinois, and they chew up every freaking toy you can think of. So that's the thing. On a serious note, so if you hear me, like, I'm going in an explanation right now, we're seeing the Nazi drop through here, going through a discount area, and I'm looking for this to trail on down into that, and I'll show you my levels here in a little bit. If you hear me switch off and get real quiet real quick, it's because I'm looking at a trade and I'm entering that trade and getting into my zone and my focus. So it typically only takes me a couple moments for me to initiate that trade, get into everything, and then I'll start speaking again. So,
Yeah.
If you think, oh my God, we lost him. No, it's just give me a moment. And I'll usually murmur. So if you hear a murmur in the background, you still got me. So.
It's the quiet ones you worry about.
Oh man, hey, it is what it is. Oh, alrighty. So let's rock and roll with this. Again, I typically work on a 3, 5, and 15. So right now I'm watching this price action here, but I do not like it. Let's go ahead and bring up the map. So here you go. This is the flow map. So right here on the NQ. And I'll bring up the ES as well for those that are trading the ES. I just like the NQ because, money.
Right.
16,800 right in here. And we see, so I talked about accumulation and distribution and then rotation of orders. We see a lot of accumulation, i.e. consolidation of new purchase orders in here. And we can see that those orders are then rotating out when they hit 16,800 here. And now we're starting to see accumulation to the downside. The market is now in discovery and push. Okay, and what I'm looking for is the market to continue to make its way down. Now, we can see that they're targeting the 16,700 right here, with 16,750 being a resistance area. The darker the color, the more orders on the book with this. Now, give me 2 seconds here. I want to look at some flow. Or not look at flow, look at the chart. So we know that they're targeting this 16,700. We know there's a big stack of orders. One, it's a roundy. So what does that mean? It's a whole round number on things. But even more so, does it have anything to the left that we should be concerned with? Well, let's get a horizontal line set up to see. Okay, that looks good.
Ding.
We're on a blue. Let's look to the left
Target
and
met.
see. Yeah. So looking back at this here, we can see back on the 8th and the 9th that we had some participation. It did have some roughness at this area. Tested, broke its way up, peeling itself down, still working right in here. So yes, that is a valid area where we've seen participation before. Where are some other areas that we got to keep in mind? Well, we can see where price right here at this 16,780 had some contention, and that's about it besides the 750 right in here. So we do not have anything above or below that really dictates, hey, this is a wall. So how do I play that as a trader? How do I formulate a thesis around that to initiate a trade? Well, we know in the macro perspective of things we break it up to our 1 year, 1 day. We're in a bearish trend of stuff. So whatever you want to call this, you want to call it descending megaphone, you want to do a head and shoulders, whatever you want to call it, multiple ways to skin the cat. What we can see on here is that we've taken out the previous day lows and we're continuing to make our way down. We do have the Thursday low at 750, which they're about to tag on this. We break that 750 there, then we're a waterfall down to, for me, I do not like to get out right at that 700. I have a 5-point buffer that I work on that. So I like to get out on this, it would be the 705, 710 area for this. That gives me about 40 points, 30 to 40 points to work with. For some people, that's enough movement. For other people, it's not. It all depends on your contract sizing, your risk tolerance, etc. But for me to look to profit 30, 40, 50 points, I'm going to have to put up, 20, 15, 20 points of risk on top of this. So if you state to yourself, oh my God, 25 points of risk, that's a lot of risk. Well, no, it's natural. So many of us have heard the adage over the years, oh, well, 1 to 2, 1 to 2, 1 to 2. The market works like electricity. It doesn't care what the color of the wire is, i.e. it does not care what your risk is, but that's been taught so much throughout the years that it actually becomes a target zone. What do I mean by that? If we have a generalized ATR on the NQ of 12 points, that means somebody can get long or short within that 12-point range And their 1 to 2 is going to be different from someone that got in at the 6, the 8, the 9, the 4 on that. Yes, it's just a couple of points difference, but it is absolutely still a difference on there. So with that being the case, whenever someone goes, yes, I have an exact 1 to 2, I do not believe in exact 1 to 2s. You'll always have a little bit of range on there, whether or not you got in early, got in late. That's why I'm a huge proponent of limit orders as well. So we can see right in here that we had a sell side imbalance on this. What does that mean? There was more selling pressure to a large velocity that offset any of the buyers. They came back to discovery there, and they're trying.
Oops, I didn't mean to cough in your ear.
Oh, no, I didn't hear anything.
Sometimes my noise suppression works.
So with this moving its way through, we're approaching what I call a business zone on this. Again, remember, trading is a business. The decision is being made right here by the market participants of, is this a discount, i.e. it's too cheap and we're going to run things back up, or is this just a breath and we go, no, there's a third party thing coming up, i.e. we can see business inventories and all that coming up that would make us want to desire to accumulate this for a further down move and target that 700 area. Now, when we look over at the ES on this, we can see big floor, 4760 here on the ES, but even more so 5 points down. Now, I got a little bit of spoofing going on here, and we've got stops in here. So what does this picture tell us? People who got short right in here, their stop is here. They're looking to target and peel off here, here, and here. So they're going to be staging out on top of that. That's only a 5 point range on this. Okay. Now we know that this is a false level as far as like a target area because we had heavy orders, they pulled it, and now we just have a couple of remainders. So I would look for this to be an influx area. If we broke that 47.55, I would look for a rush down to this. But as of right now, this is not within my thesis because we see that there are no real standing orders on this comparatively to what we have up here. That's something to keep in mind. As far as the NQ, same levels still in play. Again, they could not get below that 750 just yet. They're trying. If they do get below that 750, 725, and 700 is going to be the target. And I'll let that trend on there. Let's keep moving. There we go. So sell down, move up. Now they're testing that area. And what I really like about this is, one, we measure this out. So this is your pivot area in here. With that low. A perfect retracement would be up here. But at the moment, we're seeing a soft accumulation. So they're trying to push up to this. So what does Creed do on that? I see that for me, my perfect entry on this is between like 811.25 and 818. You know, it'd be beautiful to get up to here to the 25 to start a short. But right now, I see this continuous downtrend, sell side imbalance. There is still bearishness within the market on everything that's coming. So with that being the case, I have 2 points of entry. If I want to be in the trade right now, like, okay, I've got things to do, I see what's happening, this is my get into the market right now area. This is my wait for the market to come to me. Okay, so that's the two different things. Now, with that being the case, how do you make that judgment, that delineation of, do I want to be in the market now, or am I willing to make it or let it wait for me? that has to deal with Arval and upcoming things. So we do have an influx of news coming out. We can see the price action is getting what I like to say squishy on here. And what do I mean by that? They're stuck between a range, and you see the body of the candle. It's just kind of in and out, kind of like silly putty on this. So it's not really rocketing one way or the other, but it is definitely starting to show that, okay, there is more bearishness in this. So right now I can state to myself that, okay, I see bearishness in play. This looks good for me. I just had a sell order hit the market here. So I'm short. Down, 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 down. So where's my target? Where would Creed's target be on top of this with the risk that we have? Okay. So did not get a perfect entry, but there were people that did. So my presumption of the market is that people here with that generalized taught 1 to 2, there we go, their stop can either be up here at the top or it's going to be at the perfect entry there. And we can see a 1 to 2 generalization is right at that 1700. So for everyone that used the bottom of this candle and the top of this candle as their range, their open market range here, they're going to be utilizing this zone as, okay, I am willing to risk 35 points in order to make roughly 72 on there. For me, I got in a little bit late. So my second one here, I can see that my target for what I'm looking to do is around the 710 area. So allow that position to roll, allow that position to go. Limit orders in place. Run, 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 run.
Looking at that options pain zone on SPY, it's still $10 or $20 wide at this point.
Mm-hmm. There we go. We push, push, push. Oh, yeah, and my other level on this, we had that previous day low. Again, I'm looking at 710 as my target. So for a generalized 1 to 2.
Wow.
Writing here would be my area to keep in mind. Now, if I'm looking for further profit, let's say you want to hold it all the way to the 700, there you go. You can extend your risk a little bit more, but you always want to be working somewhere around a 1 to 2. Why? Because statistically speaking, you can then have a system, a protocol on there that is only 60% effective, and you're still going to come out on top. So that's something to keep in mind. And when you run those numbers on things and you start to realize that, okay, if you took one trade for every trading day in the year, like you managed to hit every day, that's roughly roughly 250 days on that. So you'd have 250 trades. That means statistically speaking on this, 50% of that 250 is what? 125. So if you're 60% accurate on that, you're going to have just over or right around 100 trades that will go against you. Like that's just the numbers on there. Actually, let's get that exact number real quick because it's gonna bug me if I don't. So 250 times 0.6. So yeah, 150. So if you got 200 days, so you would have 100 trades go against you on there if you have a 60% success rate. So
I'm actually scalping some trash right now. It's hilarious.
all in favor of renaming his strategy to the Trash Panda strategy, for those who know that. I love it, man, because you're able to work within it. I love it.
There's an active penny stock. Everybody's heard of it, PHUN. And
Fun. I haven't heard fun in a while.
I got long at 15, sold at 21. And then I'm about to see if it'll pop out of a flag or not. I don't recommend trading that. That thing is definitely not for the faint of heart, but holy smokes, what a move.
And we can see this push right now, and we can see on the flow what's happening. There we go. Push, 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 push.
If this breaks that low, we could see another MM down the rest of that move.
Mm-hmm.
Good Lord, that could take us all the way down to 47.20.
Oh, on ES?
Yeah.
Yeah, we could absolutely. So if we look at that on the chart. Oh, and I'll discuss. Yeah, we can get into bracket orders too. Okay, so looking here at the ES, it was the same move right in this. So we had a 3-bar move right here, and we can see these liquidity pockets. So that other tool I have, again, remember, I'm just a much more refined trader on there. So while I can physically pull up just about any chart that you've got, and I can quickly identify where your buyers and everything are, or at least the zone of where they should be at right in there. And that's just in reading the ledger of the book. So this is an LQ zone, liquidity zone, and below that we have a couple of LQ zones as well, 755 and 750 as we saw before. Now, what that other tool allows me to do is to see specifically the quantity and the breadth of that. So are they very tight, and are they only running a 2-point stretch on that? So they're like, no, I am holding out for this area. Or do they have it spread just a little bit? So let's take a look at that. We look at over here at the ES, and we can see this is tight. This is tight right in here. So they're not spread across, 2, 3, 4 points in there. They're saying, okay, here's my floor. We're holding out for this. Here's my target. We're holding out for this, and we're not going to give in. So that lets me know that there's a lot of conviction at that area.
Yeah, starting to pour in some buyers at the moment.
And give them a second. Here we go.
I'm also watching RTY lead the move.
Yeah, they absorbed it.
Oh. They might do it again.
Ladies and gentlemen, yeah, you see how this specific area at the moment is a rotation from shorts. Shorts are closing trades. We're not seeing a strong accumulation of new trades. For the market to pull out of its discovery phase, we have to have accumulation of new trades into the market, not closure of old trades. Again, the market always works in cycles on this. So as those cycles become relevant, you'll be able to go, okay, well, I see this is happening, that is happening, etc. So that's something to keep in mind. And I want to make sure I'm looking at it on here. Are you guys able to see that the blue chart that I have up? Jeremy, is that showing? Is Bookmap showing?
I don't see Bookmap on there.
Oh, darn it.
Are you
Oh, I think I'm sharing a program. I'm not just sharing the screen.
Gotcha.
Okay. Hold on. Give me a sec. Like I said, ladies and gentlemen, it's
It takes a minute. You can hover over the box that you have on your screen, and then you should be able to switch to a different display. Let me see here. There's a 3-button or like a 3 radio button options block on the bottom right corner of your display screen. The one that you're sharing with Discord channel. Wherever you see the preview tab of your Discord screen.
That's what I'm in now. Ah, darn it. All right, give me 2 seconds here. because we're still watching the flow. It's still showing the flow, which is cool. But I want to be able to show you guys what I'm seeing in the map.
At Discord's kind of fun, but it's not always intuitive when it comes to streaming.
Change windows. There we go.
There it is. Man, they are really trying to buy this, but I'm a little skeptical. This might be a liquidity grab.
There we go. And
Wow.
Yeah. That's why I was talking about they were not accumulating to the downside. They were just a rotation of price action.
Yep, they're running back to B again. So SPY target.
I'm gonna have to post this in there, guys, because it's saying that if I change screens, it kind of restarts everything.
Oh, right.
So give me a second. Let me. I'm gonna post my ES in there so you guys can see the levels I'm talking about. I promise I'm only half as crazy as you think.
There we go. There's half that move back. 47.62 target, and then we'll see if we bounce back to 47.65 one more time. Dun, dun. Love my 5-second chart, man. That thing is just glory.
Oh yeah.
No bounce. 47.60 test. Wow.
There we go. All right, so that's the ES.
There we go.
Alrighty, still moving. Next time I'll make sure to share screen and not just the program.
Yeah, it takes a minute. It's somewhat intuitive if you get in and play with it, but until then, it's shooting into the dark.
Dude, this is like tuning a rotary engine by ear.
Yeah.
No.
You just can't do that.
Oh no, you can do it, but there's going to be an old guy with a cigar and Coke bottle glasses yelling at you.
Yeah.
Could have done this. I'm like, okay. All right, so now, and this is the part. This is now, teaching side. Trades going through, things are rocking and rolling, and seeing how the market absorbs things. Again, we do have that news coming out in 5 mics, so we want to keep an eye on that. But again, we've got areas to keep in mind here. Now we open up the daily. We open up the daily time frame here. We can see we've already taken out a lot of lows on the ES here, and they're trying to fill in this last buy side we have. Again, the market is always trying to balance out. It's like a really bad canoe is what it is. But for the astute of you, you may have already noticed right in here, we have a high, a low, a lower high. So that's the beginning formation for a lower low. So with that being the case, where could that lower low go on this? A way you can discern a relative area is look back to where the trend started and find a low candle and put it in. So whatever your big red day was before, and you can go back and check this out. So this shows me that for the duration of time that I'm looking at, I could suspect a low to be somewhere between 6,700 and 6,880 would be a relative area to have that. Now, is it going to bolster its way all the way down to 4,600? No, that's going to take something extreme to occur to get down there and or a longer period of time, that's what it would take for that. So just keep that in mind. But breaking it back down to the 5-er as we get ready to see this trend. There we go. Oops. Things you do not want to hear your doctor say. All right, push, push, push. Target met on the NQ. Look at that bacon.
Man, it's sizzling.
One trade, one commission. And, and that's right there. And that trade was, 40 points, something of that nature. So for those unaware on that, when you're trading the futures market on that, the NQ full size is $20 per point per contract. Okay. ES is $50 per point per contract. The micros are 1/10 that. So, you can run that math real quick in your head on whatever your average lot size is going to be. Now, you may be asking, Creed, that's great. You're talking a lot about futures. You're putting all that together, but I'm an equities guy or gal on there. Well, let's let this news hit real quick. And then I'm going to go over to the standards, Apple, Microsoft, SPY, and I'm going to show you the same analytic on that because it is in my firm believing that whatever little symbol is up here shouldn't really matter for other than identification of, oh, this is the company. Other than that, it really should not say, oh, I'm only a tech trader, so I'm only going to trade tech. Well, yeah, if you were trading the hard asset as far as like actually trading, computers back and forth, you were doing, what was that movie, Pursuit of Happiness on there, trying to sell x-ray machines.
Oh, yeah.
So, yeah, so that's the thing. It really should not matter what symbol you have up there. You should be able to just look at any chart and go, oh, this is the participant, this is the price action, this is my understanding of those participants. So we just had 10 o'clock.
And that's just it. It's just you and the chart. Doesn't matter what the equity is, what the underlying is. It's all the same price action.
Retail inventories are off. Okay, see how the market absorbs that.
So I've got a slight extension target of 470.90 on SPY here, and I think we're going to touch it here in a moment. That's an angular support area for my big old diamond pattern.
He's sponsored by De Beers. Don't let him lie.
Yeah.
Yeah, they're pulling it in here. I'm seeing a little bit of accumulation of bearishness in here, so they're going to pull it in. Unless some big buyer steps in. So, all right, let's pull this over to... Actually, let me just go to the SPY.
Diamonds are also a trader's best friend.
Yeah. Well, I just thought of Ron White on that one. Diamonds.
A kiss on the DAX might be quite gone. Oh, sorry, I'm not going to do that.
All right, so for those old enough to remember, it is 10 o'clock. Do you know where your trades are at? So,
I know exactly where they're at.
Yeah. So we're looking at this right now. We're looking at the SPY. Let's pull this calendar off here. We can see 9 o'clock. We had our movement. I'm sorry, 9:30. We had our movement. Everything started to move here. Nice little squishiness in here with the range. We're seeing a big brick right in here. And we can make the assumption, we had a gap down. Do we have logical reasoning to suspect that we would fill this gap today? No, we do not. Because our macro, when we look at our daily on this, we look at our daily. Previous was below the low. We can see the rollover from the top. We can see how this is forming out on this to show weakness on the top side of things. So with it showing that weakness, I have no logical reason right now to suspect we would fill this gap within the morning session. Now, with that being the case, that lends me towards a bearish bias on this one. That does not mean that I will only take bearish trades. It just means that's the first thing that I'm looking for is bearishness. We can see here 47, call it 47.50 for easy numbers, is the bottom of this previous imbalance that we had in here, this fair value gap as it's called. And this is a zone of participation in this. So for us to continue and have bearishness, I would suspect a floor at 47.50 from whatever our open is on that. Well, that zone that we have, you're able to judge and go, okay, well, based on our ATR of $4.80, whatever your ATR is on the day, is that zone within means of reaching that? And in fact, if you go up and look at the statistics on this, it is, Jeremy, correct me if I'm wrong on this, it's 87% of the time, if we do not have a third-party actor, the market will actually fail to make its entire ATR move. That's why typically you'll have an up Monday, down Tuesday, and vice versa on top of that. And that gives you your opening week range. And then you have the other reports that are on late Tuesday, Wednesday, that are your third-party actors. And also if we have FOMC on Thursday as well with that. So with that being the case, those are your third-party actors that would balance out your ATR that goes, oh, we made the ATR and then some. So that's something to keep in mind as well. So looking at it right now, we break this back down to a 5-minute chart.
Looks like we're heading to back to half back.
They're trying to bring it back, and we can see right back in here, this 2 to 3 o'clock session, we had a low 473.10 right in that. Actually, was that the day's low? Yeah, it was. That was the previous day's low on that one. So that previous day's low, that does become a target right there. Actually, let me change. That's going to be, let's make it.
Man, that pain zone has not changed. It's still $20 wide.
So, PL target. The previous day low target right there. So if we did see some bullishness step in, i.e. a 10 o'clock reversal, then we would expect price action to try and pull its way up. And if they get enough support behind that, then that's going to be their target. Creed, how can you confirm that? How can you have confidence behind that? Okay. Let the math speak for itself. Unless you're in quantum physics and theoretical physics, the math doesn't lie. So.
Yeah, no particle entanglement here.
Oh, man, if I could do quantum trading. God.
Right? My goodness.
You'd be right and wrong at this. You'd be neutral. You would be net neutral. Now that I think about it. Like, you would never make a dime, but you would never lose any time either.
That's what synthetic neutral positions are for. That's got to be it. It's quantum trading.
There we go. All right, we're going to roll with that one. So, all right. Your stop is the low of the day here. Where would your 1 to 2 be? Keep going, going up. We're right. Where is it? Right there. So 473.20. So if you were to have gotten long on the top of that 5-minute candle as we were breaking out of that morning range and your stop was the morning low, your target, your PDL target, previous day low target, right there. So the previous day low was like 47.310. Because we're approaching a roundy on that, there is absolutely no shame in saying my target is 473. Why? Because there is a 15-cent buffer at all of your whole dollar areas when it comes to the SPY, the Q. The reason behind that has never been clear to me. I asked it when I was over on the street. I asked all of that, and the continuous response that I always got was, just been that way. Well, gee, thanks. You can't give me anything more definitive than that? No, it's just always been that way. So we work that area. Okay, cool. Tom wears brown pants on Tuesday. You're going to take the bet. So with that being the zone to work with, if you're very, very, very confident in things, then yeah, let it run above that whole dollar level, 5 or 10 cent on there. But plan your scale out of that trade to start around the 85 to 90 cent area on that one. And if you do not believe me, go to your brokerage and open up the level 2 information on there. This can either be the L2 book at the bottom, or it can be the time and sales. I recommend the time and sales, but watch that price action as it gets up to all up to the 90 area on there, and you'll start to know, oh man, we have a deacceleration of orders when we get to that area, and then you'll start to notice that price rotates on there, and you'll start to notice that price goes, we were accumulating, we're waiting for the move up. Oh, look, there's nobody here anymore. And then right around that 90 area, you'll start to notice, we're starting to accumulate a lot of sell orders at this spot. So that's just a little tidbit that it's one of those things that you'll never really see it in a book. It's just something you see as you've worked in the market for years. So
it's the commonality of things. We start to break things down into statistics.
I still love the old saying is there is no common denominator in the market, but the fact of there is nothing but common denominators. What?
Right?
Yeah. And it sounds like a confusing thing, but it means that it's the whole rational and irrational market theory
right
on this. That's a whole nother discussion on that.
We could just take it and narrow it down to Warren Buffett quotes. One of my favorites is the market can remain irrational much longer than you can remain liquid.
Mm-hmm. And it's a true fact. I can think several times to where I said this has to turn around. There is no has. That's something to go ahead and remove from your vocabulary as a trader is definitives.
Yep.
In there. I'm a very big advocate of as you say it, so it shall be. And that's why when you're formulating a thesis, I have a 5-part thesis that I put people on as I'm training them to do this, is that it's where you get in, where you get out, why you got in, why you're getting out, and what you're willing to lose. And a lot of people say, I should get in at this area. Well, should is for T-ball. If you're going to be serious about this, I will get in at this area. Oh, Creed, it's just words. Yeah, words are also the same thing that put billion-dollar contracts together.
Yep.
Words matter. And it's proven. Psychologists over and over and over in every industry. Actually, I was doing a conversation with Denise Scholl from the Rethink Group, and these people deal with deca-billion-dollar managers. They deal with high-performance athletes, all that. And I'm talking with Denise, and that's one of the first things that they do for any pro athlete or anything like that is, hey, we're going to change your daily vocabulary because the market, or let me rephrase that, your trading style is a great representation of who you are as a person. And I know that statement is going to scare a lot of people because nobody knows your demons like you do. And your trading will absolutely bring those out. You're getting out of a trade too early on things, you're not holding it, you're a skittish person. You have uncertainty within you. You do not have confidence. And see, we're getting that nice move right here. You do not have confidence within your actions on that. Now, I'm not saying I'm a perfect trader of anything. I know, especially when I was first starting on things, I didn't have any confidence on that side. I don't know what the heck I'm doing on there, but as the years develop, you develop more confidence. So you have good confidence in it, and that bleeds into the rest of your life as you do things. Do things that scare you on there. So you build up those synaptic pathways to go, oh, look, I'm confident in this move. I understand that I have 70 cents of risk to make $1.40. I'm only going to allocate one contract because we hear Jeremy talking about this. He may be doing, 100, but for my emotions, I'm only going to do one contract because I know that I will lose 3/4 delta or I'll make a delta and a half on that contract. And I am only willing to really risk half a delta, but you know what? The math says I need to risk at least 3/4 delta. Let's give it a shot. So you see how that's an incremental step up from your fears. It's not a huge leap off the cliff. Incremental step ups. It's how you build muscle. It's how you build confidence. It's how you build accounts. So,
Just a little bit at a time.
mm-hmm.
Man, I'm getting a kick out of this penny stock. I'm still also scalping futures and running some options here, but just messing with PHUN. It's trading at like 20 cents right now, but I've been in and out of this thing a few times already, and it's just been methodical with price action. I'm running it on.
Down to the 1 minute. I'm going to show you guys. So you guys know I typically work at 3 to 5
Yeah.
on here. Look at this on the winner. So looking at this right here, we can see using the exact same freaking logic that I've been talking about. Okay, we had the initial gap down. We know within penny stock world, it's been promoted, talked about, put all the time that, gaps should fill on this. Well, we see our nice little bit of movement right in here. We can see nice movement up right here. Little bit of a pullback. So upon breaking that, what is that, 940 high for me as a trader, this right here is a beautiful entry point. In fact, if we look at this, if you go to the BB blogs, type in breakout retest on there and you'll get a blog up for that one. We can see it definitively that this is a nice little setup. They had the range, it broke out, it retested, and now it's making its way up. But due to the volume of participants, a very big resisting structure for this is going to be what? Well, we look prior and we can see previous day low right in here would be an area, but even more so this right here. So this was the low the last time it broke a structure. That price is 25.55 on there. So if I was to get a position, and again, we use the math because, math is our friend, unless you're in the courtroom, but we do you don't want them doing addition in there.
No.
So let's say you had a limit order right here at that high. Okay, we're going to say, you're the bee's knees, you got a perfect trade. Where would our stop be on that? Well, according to the traditional way that this is taught for a breakout retest, your stop is going to be one of two places. Now, let me get my arrows. Your stop is either going to be in this high right in here, the cup. So your stop would be right there, or it would be at the bottom. I personally teach to be at the bottom of this little cupping action right in here. That's my preference on that. It allows enough breath for things to occur. So for me, my stop would be there, and my 1-to-2 ratio would actually have us at 2.972. Okay. Well, I honestly have no idea if there's anything to the left here. So what I'm going to do is I'm going to put a horizontal line at that area. All right. We all see that. I'm going to trick up the sleeve. Nothing like that. I'm going to reduce that so it's a little bit easier. We're going to go to the left. Let's see how many interaction points of relevance this line has when we go to the left. Going back. Well, we've got 1 from 2 to 3. We have about an hour and a half of consolidation on top of that area. And then at, call it 123 before that, this was a big accelerator candle that then allowed to that. We see a pivot at 1225, 1230 that then sold to it. We even see back in here earlier in the day. There we go. So point proven that that area is a statistical target. So for the people that are not just doing in and out, in and out, in and out, in and out scalp, and they're looking for this longer term trend, this right here is an optimal target range for them. So with that being the case, I'm able to plan my trade around that area. And that way I'm only taking 2 trades, 3 trades, scaling that stuff out. And as your account grows and you go through things, you really do not worry about commissions as much. But if you're doing a lot of volume, like Jeremy does a ton of volume. Like Jeremy does a lot of volume
Oh gosh,
on there. Yeah, I'll say you do as much volume on penny stocks as I do on currencies.
I'm
And
I'm on swing number 7 right now, and I'm targeting 24.8 to get out of this leg.
Okay. I was confused.
Oh no, not 24.8 trades, but 24.8 cents for this exit.
Yeah, you had me there for 24 point. How do I do a 0.8 second here? That's when you allow a day trade to become a swing trade.
Right.
But so, and this puts it into play too that okay, for this cycle of that trade, for this specific cycle, I am willing to risk. What is this? I'm willing to risk 4 pennies to make 8 pennies on there. So you put on something like 2,000 contracts, 4,000 contracts, whatever it is, and then you know your numbers you're working with. So that's how you make that logic. That's how you work through things.
Good morning, everyone.
Morning.
Morning.
I always recommend whenever you're having struggles, trading the MES contracts like we do, trading SPY contracts or trading any large cap for that matter. If you're just having trouble getting a swing for price action trading, go scalp an active penny stock. It is absolutely the same price action, but you don't really have to put any risk in it. I mean, if you got a small account, you throw 10 shares around or something like that. Get used to the process. That's the whole deal. And just trade the chart. You don't have to really have any, emotional attachment to the money involved in the trade. You can just trade the chart, and you don't really have to care what it is.
Look, I'm going to put it this way with the market, and it may be kind of brash, but it's true. When you're in the market, there should be no emotions. You want emotions, go get a significant other or a puppy.
Right.
Leave emotions out of it.
Absolutely.
And remember, the more money you make, the more puppies you can get. So that's a great motivator.
Absolutely.
And for that one person out here who's a cat person, get more cats. Get a cool one. Go get an F1 or something.
There you go. Or get a really nice cat tree.
Just plant like a huge live oak, and that is the cat tree.
There you go.
So right now I'm looking at the ES, and what we've had here is a nice little pull through, and now they're pulling their way back down. I am not at the moment seeing a trade I want to take. I see some setups of possible trades, and what I would like to see on the ES here is we have a very, very, very beautiful loan, and I'm looking for a liquidity grab. This is either going to be a take or just a runoff on this one. We do not have the vol in the market right now, unless something comes out, because Zelensky did ask Switzerland to set up meetings for peace talks. So unless some news around like something like that, or I don't know, BP gets another oil spill, something of that nature. Chevron does something funky. I'm not looking for us to like rocket down. We could edge down, but right now this is telling me that okay, this market really wants to work within basically this range. So if this is a liquidity grab, what that would then entail is that we make our move down, we then pull our way back up on that. And if that happens, I can see this measurement. And once we are back above this 47.65, Creed gets long. if we're just bouncing around in this little bit here, that's not enough juice for me to be worth the squeeze on this. We break this zone right in here. We break this 4760 with conviction. Then we can look at the flow map and see, okay, we've got areas stacked here and here. I'm going to play that for 10 points. So
there we go. Nice little swing. Just watching it bounce off the bottom of my liquidity zone there for SPY and following through with the ES. Just a quick half back. I'm looking at exit like 47.63. I'm really short term, going for a 3-pointer.
Man, playing basketball over here.
Oh man, yeah. My frequency of trading is well. Let's just say it's almost borderline sadistic. I'm just.
I mean, well, you got to keep in mind. Someone asked me the other. If I know it's somebody that's not in the financial markets, I tell them I'm a dentist or something like that. Because, no offense to any dentist out there, but nobody really cares. Like, unless it's another dentist, are you really going to sit there like, oh, yeah, I got the newest WaterJet 3000 with a 500 megawatt bulb? Like, who cares?
Yeah.
There's going to be that one dentist that gets pissed off at that. And I do somewhat apologize, but it's funny. But if they're in the financial world, then you can talk about that. You can talk about, yeah, man, I put on a bunch of trades. But at the end of the day, we make our living off of calculated presumptions of over 10,000 other participants. So this is probably one of the most mentally challenging things that someone can do besides like self-isolation on there. Because you have to be a good trader, you have to process a lot of information. And even when you do, I think it was Parks and Recreation that, you can do everything right and still be wrong. It just doesn't work out. And that happens. Again, the statistics, you put on 250 trading days, you put on 2 trades a day on there. You got 500 trades, even on a 60% successful strategy.
Damn.
All right. 300 trades in your favor, 200 trades not in your favor. So it's just part of it. Now, the last time I ran my statistics on there, because this was 2 weeks ago when I had to send reports out. I think it was 78% success rate I had last year.
Nice.
It was funny because as my account went up, I actually noticed that my percentage rate went down on there, not by a lot, because I used to be around like 85, 88% accurate on there, and or success. Let me rephrase this, success. But then as my accounts and stuff went up, then and I'm not taking as many trades, it actually kind of skews the number a little bit there. But we're in a different market on there. Could I take a boatload of trades? I could. Not going to. I don't have a reason to.
Bam. So nice. I took it twice.
Here.
So I got 47.60 to 47.63 once, and then I hit 47.60, 61 for the second entry. Clipped that out at 47.65. Perfect. All in that time you were talking.
Well, and that's the thing too. You can place on a trade and just let it rock and roll. Let it go for it. So see now this regression in price, back up to it. So we run a projection. If I wanted a long trade, it would be right above here. My stop would be here.
It's got to break that zone, doesn't it?
Mm-hmm. So if I was looking for bullishness,
whoa, mama! There's your bullishness.
Yeah.
Just for a moment. That's 1 bar up out of the top of that range. Watch for half back, and then we'll see if we can get any momentum out of this.
Guys, he keeps saying half back, and I really want some ribs.
Right?
I'm killing ribs right now, man.
Oh, man. I got to take you to this rib joint sometime.
Oh, dude. You know what? I miss good Chinese spare ribs. Oh, man, with some fried rice.
Oh, yeah.
It's not good for diabetes, but, man, that's some good stuff.
No, it's
Oh yeah, that's another thing too. If you have a medical condition or something, you got to take that into play. For those unaware, I'm a T1D on there, and absolutely, I have to take that into play. And it's actually part of my personal rules that if my sugars are out of level by a certain deviation, I will not trade that morning. And for those that are aware of all of that, that sometimes that stuff just happens. So there we go. Nice little push, 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 push.
almost conviction in that move. We're right back to that previous high. I mean, 15 minutes ago. $47.60 says, hang on a minute, hold my beer. Sorry, not 47.60, 47.70. There is a pile of orders waiting on the sell side there, about 540 of them. And if this penny stock doesn't hit my target, I'm just going to close it out for the day and walk away. Starting to run out of energy on that thing. Didn't quite hit my 24.8 target. That's still on the board, but right now it's consolidated to a point right at about 23 cents. I might just clock this out and go home.
In a world of pure consolidation.
And when they run out of oomph, I mean, they'll tighten up eventually and make a big move, but oftentimes when people get bored with it, they'll just sell it off. So they'll just feed into a big old sell candle. It'll rip half back and then just bounce off of that one more time because everybody's going to panic buy it at that point. Volatile penny stocks, man, that's kind of what built me to where I am today. And I call it the hard way to learn price action, but it really isn't. It became easy over time. You literally just look left, find previous levels, and trade to them from A to B. Rinse, repeat, find another one.
Well, and that's the thing, ladies and gentlemen. What you're getting is you're getting our 10,000 hours. And it's the years of working with this, putting things together, building an understanding of market action, price action, how things work. And then, but we can't really give you the full blown. We can give you the textbook, we can give you everything behind it, but sometimes you got to twist that wrench yourself for a little while to understand that, look, engineers hate you, market makers hate you, and you got to build that resilience on your own.
Right. And it definitely takes its toll on the time scale. You got to have a lot of seat time to get this all right. But when you do, boy, does it pay off.
Well, see, you start with getting seat time in a chair, and then you end up getting seat time on a jet. It's still seat time.
Right.
You just trade in a different environment. By the way, do not trade on frickin' Wi-Fi from United. Trust me.
Gosh, no.
Delta. Ugh.
Yeah, I had a wheel trade on, and I had to take a flight once, and I put in a limit order and then never got a confirmation of whether it filled or not until I was at the terminal. It did fill. I just never knew about it, and it filled at a few seconds after the time I set the limit order.
I've had that happen before, and that's something to get into the habit of, and even put it in your journal. Did you clear off all trades? I've had times to where I'll have onesie twosie contracts that I legitimately just completely forgot about, or when I accidentally double hit the button on there and didn't realize that instead of a closeout, I did a closeout and a reentry. on there, and you wake up the next morning and you're either up a bunch of money or down a bunch of money, and you go, huh? So then it ruins the rest of your day. Like, well.
Here comes that sell candle on PHUN. That thing's done. And we're clipping the top of the range again on the ES. It's threatening to break out of this zone, but it's looking more and more like a big old bear flag to me. I can hope it's a bear trap, but just gotta wait for the break and trade the break. Don't trade the setup. That's some friends of mine. When are we trading UNG again?
Oh God.
I'm probably done with that this year.
You remember UGAS and DGAS?
Oh yeah.
Oh my.
Those were nasty, man. Those burned a lot of people.
Were you trading when YECO got pretty big? Did you trade YECO? Yeah.
I never traded it, but I remember reading a lot about all the stuff that went on with that, and it just it never grabbed my attention enough to be interested in trading it.
Say that waste management. I mean, for those unaware, you can. I think YECO got delisted. You guys, DGAS on that. But I thought it was really interesting how those were like the original GMEs, AMCs on there, and so oh my God, we've never seen a market run like this before. Yeah, we have. It's just ran in a different way. It just didn't have this type of media coverage.
Right.
On top of it. That was pretty much the only difference.
You remember Elfin? LFIN?
Oh, yeah.
That was a rager. I made a killing on that trade. And then it was sad because a lot of people went chasing that thing, and then they halted it, and then all of a sudden they're under investigation and no one could move it for like days. Mm-hmm. And man, I was just sitting there like, oh no, you don't sit with that. You do not invest in stuff like that. You scalp it and you walk away. Give it a haircut and go away.
One day I'll show you guys my halt trade strategy. I actually have a very, very, very specific style for being able to trade halts and T1 halts on the T1, T2s. And yeah, one day we'll do those. We'll do those for the morning. And those typically happen more so about the end of Q2 as we're going in the summer, and it's usually on biopharma with a lot of stuff.
Biopharm is a very vicious sector to be trading, and if you do it right, you do very well very quickly. But man, you've got to have a little seat time with your price action to go and scalp that stuff. Yeah,
and again, you're building the repetition behind doing it. That's kind of the hard part of things.
That's why I love teaching price action with that 5-second chart, because you get a whole lot of repetition in a short amount of time, and it's all the same on every other time frame.
Same, but different.
Exactly.
So you can see I just marked out this channel that we're working with here.
Yep, and it's made its second attempt on half.
Let's see. Yeah, they're accumulating. They're wanting to take this long.
It's looking like the bulls are interested here, and if you look at the 5-minute, we kind of got that what we sometimes call the Wu-Tang bottom, or the double bottom where the second high is higher than the first high, or second low is higher than the first low. And it's got that reversal look to it that everybody looks for. So you'll see a bunch of participation all of a sudden fall into that when it starts to break. But I always look for the previous high, or what I like to call R1, as the make it or break it point. So if it's going to be a reversal, it's got to break that previous high. If not, then it will likely reject there, and that's where all the short sellers are going to be waiting.
I say I've got a long in the NQ right now. I'm keeping perspective on things here.
It's looking like right there's the pullback. Maybe we'll get a quick half back candle and then we'll continue. Half back would take us exactly to the top of that box, or top of that zone.
Mm-hmm. Push, push. And what I'm targeting on this is we also have a zone we're working with right in here, and I'm targeting right here at the 16777 because that's where this FVG started.
Yeah. If we break into the next liquidity zone, we start to A to B that on SPY. That's a zone that starts at 472.20 and goes all the way to 473.20. It's a whole dollar move. And that would be 100 points on the ES.
Only 100 points? Come on. Rookie numbers. We got to pump those numbers up.
Right? There's the last accumulation. Let's see what this 1 minute bar does. Bye-bye.
Yeah, I'm looking here on the map. There is... Yeah, accumulation of new orders. This isn't rotation of shorts.
No, this is not covering.
Alrighty.
And you'll see a target of about half of that fall into place. So, like, watch for some sellers around 47.72, 50, 47.73.
I'm actually gonna post this one up real quick. I cleared out of that trade, so I am flat as a crepe.
Nice.
Crepes.
Yeah, I'm like in and out of that thing, and sometimes seconds on the ES, but I'm looking at those 0-day SPY contracts. I'm getting into a rhythm with that. I don't recommend it for the faint of heart or the beginner yet, but I'm working on perfecting a sweet spot trade, as I call it, on those 0 days, just so I can help people out, because I know a lot of people are taking a lot of interest in trading those, and a lot of people are giving money to the market. So I'd prefer to help people retain some profit out of those trades, and I'm always in tune with finding the just the right amount of delta on those contracts to make really nice returns percentage-wise. So I'm looking for, if I'm looking at contracts between like 5 and 8 cents a contract, I'm looking to double that. So I'm looking to sell those between 10 and 16 cents respectively. So I'm always hunting for that little sweet spot in delta. And the idea is those contracts will double typically on about a dollar move on SPY. So if I find myself seeing an A to B setup on a liquidity zone where it starts to enter that base of the zone and run to the top of the zone, or from the top down, whichever way it's going, I'll start looking at those contracts and finding that sweet spot where I know the value of those contracts will double. And I intend to, once I get this all perfected to where I can really consistently trade this particular strategy, I'll make a video about it.
Oh yeah, speaking of, there were some great comments last night. If you didn't see the message, I asked for anyone that can give me some specificity on what they would like some of my next content to be on. There were ones of risk management, how do I stay in a trade, out of a trade, logic behind it. I'll be doing some more detailed stuff on that, as well as community-only PDFs that I'll put out on there that, kind of explain the logic, what I'm looking at, what I've used over the years. I later on in the year, I may actually do a decade of progression, and I'll have to see if I can find some of my old stuff. But I will. I'll show you exactly what I was doing when I first started on my first account and everything. And then, what I do now, what's different, all of that. And you guys can kind of see the progression that I made through it. And it may give you an aha moment on things. I know me, I am a learner of hard knocks. Ask anyone that's been with me on that one. But I learn quickly as well. So keep in mind that you may get something faster than me. I may get something faster than you, just due to the natural learning style of stuff. But I absolutely am a person that I had to do it to learn it. Not, I read a book and there it is. Now I know thermodynamics.
Right. I mean, towards about the halfway point of my mechanical career, I started taking on a lot of fabrication and stuff. So I had to learn a lot about metallurgy and different temperatures to do different things to metal with and stuff like that. And it really enhanced my ability to work with the stuff, but it also took a lot of time to understand it and not necessarily go into a trial and error phase because I'm producing stuff that has to work. But I had to go and do a little practice on the side with that. So it does take a little bit of time to invest in learning something new to benefit something you're already pretty good at. But never forget that it's important to do that once in a while. So when you get comfortable with what you've learned, go and think outside the box once in a while and try to bring more in there to enhance that ability.
Well, and when it comes to comfortable, I am with my trading and all of that through there. I am confident, but I am about as comfortable as a porcupine in a balloon factory when it comes to things. And what do I mean by that? Is that there is so much changing around you. There's some core things that are always the same, but because of how the markets are designed and come together, there's always a third party actor that wants to come out of nowhere. And when it pops, if you're not ready for it, it's going to scare you. It's going to mess with you. And I notice now the things that scare me within trading, and I do still get scared about a couple of different things. Right now, it is sizing more than anything, and it's one of those things. So right now, my average sizing, like I said before, on the ES and the NQ is around 50 contracts on there. I've put on much larger size before for very specific things, but I am, as the market evolves and more liquidity comes through and it's available, I am working on being able to feel more comfortable with being able to leave 300 contracts on for a swing on there, leave 500 contracts on for a swing on there. Right now, I'm just not at that level. Like, I'm okay with putting 50 to 75 contracts on for a 3 to 5 day swing, but that mentality is still there on, even though my process is solid, everything is good. It's getting over the human aspect of it, and that is something that I think pretty much only the Marine Corps has ever figured out. Is how to get over that human aspect of stuff. But you'll build it out. I'll build it out, and it's the 30th and 31st. We have FOMC, so that's when you'll see me actually put on some larger size, as long as the liquidity's there and things set up for it. But those are the days that I feel really good on the market, and I typically only take one trade on that day, and that's at the meeting when Powell's about to come out and speak and do all of that stuff, because there's some very specific ways to run that trade to where that singular trade I have still over an 80% success rate with on that one. And I like it. It's good. I mean, again, 12 commentaries on the market throughout the year, 10, 12 commentaries, depending on if they cancel one or not, then 80% success rate, you're doing good. And your risk metrics always stay like a 1 to 3, 1 to 5. And, it's nice cheddar in the bank account, but it also shows that, okay, my logic is still valid, even when we have a large affecting third party actor in the market.
We might get a 3-bar here. Yeah, I'm kind of still at the level where I have a couple different futures accounts, and I kind of keep them small. I run my sizes within reason of small, and I just take distribution off and I keep them small. I'm not quite at that level where I'm sizing up my positions just yet, but I'm also making a living at this, so it's like I've got to kind of take that distribution to go and pay the bills. It's still growing, but usually when I do grow my futures accounts to that size where I can scale up a little bit, I tend to move that into my swing trading account as for growth, because those are my long-term accounts, and that's where I'm running those options income strategies. So I'm a little bit different so far, but later on, when I feel the time is right, I'll be taking that leap into going into larger size on my futures trading.
All right, family, you heard him. We've got to bully him into scaling up. Come on, people. I need some help. Peer pressure.
When the day comes that I start running 100 contracts, well, I'm probably going to have about $1 million in that account to get there.
Yeah, well, and I mean, that's the thing, is you will get there. It's a matter of time.
Right.
I mean, even if we go back to the mechanical aspect of things, I mean, think about when you first walk into the garage and there's always a couple of people, the guy who's overly cheery, the guy who only knows profane words, and then the old guy that's sitting back there that, oh yeah, there's another water pump for an F-150.
Right.
So eventually you'll get to be the old guy in there and you just go, all right, there's another one. But every now and then someone brings in a freaking rotary and you just go,
something neat. Yeah, something fun. My favorite one is way back in the day. I used to work in Thousand Oaks, California.
This is not at least in the 1800s. There's no way back.
I used to work on a lot of high-end cars in Thousand Oaks, California, and like people would bring in like even souped-up cars, like a really track-ready, Porsche or something like that, and it was always a great time because they'd have custom suspension on them. They'd have me. I was a suspension guy at the time. They'd have me doing all the track tune suspension for them, and they would run them up in the track. Or if it was just somebody's everyday car, I've actually worked on quite a few luxury cars where they're nice Mercedes or BMW 7 Series on up. At the time, those were the Razoo or whatever, and you get into a niche where you're working on the really nice stuff, and then someone brings an absolute curveball to you, and it's the funnest thing you've ever had to test drive. This guy brought in, I kid you not, it was this little Mazda Miata, but it had more turbo than engine.
Yeah.
You couldn't hear the engine over the turbo in this thing. And he was taking it straight up to Northern California to race, like literally leaving that day. And he asked me to set up the suspension and go take it for a drive. That was the quickest thing I've ever sat in. I mean, it absolutely scooted faster than the most souped up Porsche I'd ever driven at the time. And I was like, wow, okay, this is interesting. But the custom setup the guy had it was just butter. I mean, he probably had well over 4 or 5 times what that car was worth into this thing as a race car. And it was just a lot of fun to work with, and I truly enjoyed that. And then to go out and drive it was even more fun. So it's the weird things.
It is. Well, I was out at King of the Hammers over by Joshua Tree not too long ago, and the stuff that people put out in the desert, if you've never had an experience like that, it is absolutely worth doing to just go out to like King of the Hammers or a desert race or something. Even if you're not into racing, it's just the adrenaline and the people around it. It's a very fun experience to go out and see. And I always recommend people. The world is so small now. You can go do things, even if you're still working a 9 to 5 and just learning to trade and doing all of that. Make that a goal for the account. Is that okay? What I'm going to do with this account is going to be able to pay for my holiday trip in 9 months, 10 months, something like that. So the account has a purpose and a reason for existence. So you take it seriously, because the bigger the account, the cooler the trip you get to go do. But if you're thinking, oh my God, Creed's talking about this, he spends $30,000 a trip. No, you can quite literally hop on a plane from the East Coast, head to Medellin, Colombia, and for like $2,000, go on a boat, have some fun, go hike, stay at a nice place there. You can do it for like $2,000 for like 5 days. So it's one of those things that once you get to that place, you have to give yourself rewards. If you do
Right.
not give yourself rewards in trading, it becomes one of those jobs you hate and your mind wanders. A wandering mind in the market is probably one of the most dangerous things that you can have. And that's, if I can give no other advice than that, is do not have a wandering mind when you're in the market. When you sit down, you're at your trading job, do it like your life depends on it.
Yes, sir. But don't let stress get into you either. That's the other part.
Oh yeah. Amazingly, I should probably have a lot more white hairs than I do when it's with the way the market works. It's that. Nicole, yeah. Bookmap is cool. I've had Bookmap for a while. Sig uses Jigsaw in there as well. I know the guys over at Bookmap and everything on there. Spoke with them several times, and I like Jigsaw as well. When it comes to any type of a, there we go. Move. Any type of a program like that, it all depends on the data feed that's coming in, because I had a big discussion on whether or not the one that they have on TOS is good, and we all came down to the same consensus. It is the exact same application, but the data that's being fed to the application does it a disservice on its ability, because again, it is a viewer of orders within the market. Well, it can only show what is being presented to it and nothing else. So if it's getting crappy data coming into it, it's going to give you crappy info on that. It's like having a map that's 100 years out of date. Yeah, it looks cool, but it does not really help you much when you're stranded in the middle of Utah. So
Nope.
And then next time that I stream on this one, I'll show you guys and gals the other programs that I use on as well for some of my longer term. I think the next time we trade on this and I'm streaming, I will as it's the teaching time through a trade. Ooh, this is looking good. I'm getting ready to short this.
Yeah, it's starting to break that zone again.
Yeah, I want to see conviction in that. Wow, there's no order. There's no orders on the book. That's interesting. They got a stack at 16.8. What about on ES? They got 465 on the ES with a lower order at, they're running 5-pointers.
Yeah.
6.5, 60, 5.5. 5.5 spoofed out between 5.5 and 5.625. Huh. Okay.
That looks like a carrot to me. They're going to pull that off the book one tick away.
Well, I wonder if it's a bear trap.
That's what I'm thinking.
Yeah.
It smells like one.
Yeah, I've been a smart cookie so far, so I'm being cautious on things. and I'm not going to be taking any trades right now. It's about to hit the 11 o'clock hour, and that hits my time constraint on things. So I'm being very very cautious here.
I might put up the bear fight meme or the bear fight gif. I'm sure you've seen this one. It's hilarious.
Oh yeah. I saw one. It had this lady. She was sitting there. She was it was a bigger gal. Like I'm gonna say, like, a Siberian gal on there. She goes, "I do not want to be pretty. I want to be strong, like woman that beats up bear." And it kind of had her in there, like beating up the bear. I got a good
Nice.
chuckle out of that. People fighting bears funny. For those unaware, Jeremy and I both have lived in Montana, and it is not outlandish to come across bears pretty often. In fact, I've actually had to fight off a mountain goat, and that was not fun. But eventually became a friend. So for those unaware, I own a ranch up in Montana and all of that. And I'll post photos and stuff later. Right now, it's literally the coldest place in the U.S. I think what did the report say? Negative 55 up by Helena and Kalispell.
Yeah, it's psycho.
Yeah, like that's when you're a full summer delta the other way. That's when it's, and that's, ladies and gents, that's before wind chill. That is before wind chill. So, you add a little bit of wind chill to that, a little bit of diesel to gel up.
Oh yeah.
Fun.
Yeah, I learned a few old timer tricks about diesels in cold weather, and one of my favorite ones is I worked for a guy, and he did work on a lot of trucks, but he wasn't aware of how to ungel diesel fuel in an emergency, and we had to move a truck. So I'm in the shop and I hear him cranking and cranking and cranking that truck, trying to get it to start. I'm like, I calmly walk over to the wash sink and I grab a bucket and I start filling it with hot water. And I calmly walk out to that truck. I'm like, hey, hold on a second. I grab a couple rags and I throw it over the fuel filter and I just start slowly pouring hot water over the fuel filter. He's like, what are you doing? I'm like, just give it a minute. Pour the hot water over the fuel filter slowly so it takes a lot of heat to soak into that fuel filter. And I said, okay, hit it again. Started right up. Where'd you learn that trick? Like, I didn't learn that one. I just sort of thought about it and did it.
Mm-hmm. Well, and that's there we go. See, it was a they're really rare. I'm not touching this.
Bear trap.
It may trend higher on things, but I am not. This is not within my book of. Oh yeah, I like this. I don't. It's. It may go higher. That's cool, but it's not within my parameters, within my protocol. So I'm not taking any more. And I've already had a good morning on their 3 for 3 on the greens. So that's solid overall, and solid.
Good features trading day. This is a range day, and man, we've had like I've traded like 7 setups already, including this one, and just pretty easy going day.
Oh yeah, and I see here run downhill. They say bears have trouble running downwards. No, they do not.
Nope. they don't care.
But moose do. Surprisingly, moose are very clumsy.
Yeah.
On their bears, no problem at all. But moose, yeah.
They will run anyway.
I'll tell one last story. Run faster than your friends. Yeah, well, that's the thing. You don't have to be the fastest. You just have to be faster than the slowest person in the group. Okay, so I'll tell one last story on this one, and then I'll kill it for today. It's been a wonderful day. So if you don't want to hear the story, there you go. If you do want to hear the story about me being a dumb tourist, then this is it. But otherwise, it's been a beautiful trading day on this. Make sure to journal your trades, always ask questions, and keep conversation going in the main chat because we're always paying attention to that as the market goes on. And again, remember, this is a teaching atmosphere. All right, so dumb story time. There is a place called Phillipsburg in Montana. and was going through, went on a hike, had camera with me, and all of a sudden I see, this is the summertime, I see a nice majestic moose in the water. I go, wow, that would make a great photo. And so I tried to zoom in and I couldn't really get a good photo. I go, let me get a little bit closer. Yeah. Now, let me set the scenery for this. There is a high mountain wall on the right. There's a high mountain wall on the left, and it's just a marsh in the center with the creek going through it. Moose is in the creek. And I go, yeah, let me get a little bit closer. So my
Famous last words.
Oh, man. So my dingus self, I managed to put my backpack down. I have just the camera on me, and I go full National Geographic on this thing. And I managed to crawl to about maybe 30 meters from this moose. And he's got like the reeds and stuff on his head and everything, and beautiful freaking photos. And I hear it, and it goes click, 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 the shutter is still going. And the moose looks up at me. And that was at the point that I go, wait a second. I'm a 190-pound human against a 600-pound moose that can run in water, and I'm in its territory. This is not a smart idea. Thankfully, the moose did not charge me, and I backed my dingus self out of there and made it back up. Got some great photos. But that's the first time that I had my encounter with a moose on that. So, moral of the story: if you're in a marsh, don't get within like 50 yards of a moose. It's not a smart idea because they will charge you. So yeah, that was the first time that I got really good photos of a moose down in the marsh in Montana. So, got plenty of more random stories like that. That's the cool thing about trading is it allows you to live a very different life on that, and you're able to go see and do different things. You can ask any of the members in the room that have met me in person. Again, I'm the exact same person on that. And there have been several times that people have been like, hey, can you come out to this thing? And I go, yeah, sure, I'll see you this weekend. And I can hop out and do it. And that's what trading allows you to do, is it gives you freedom back to do more things. So I'll leave you with that. All righty. With risk management. Yeah, that was very bad risk management with the moose. Thank you.
Yeah.
I could have really got hurt on that one. So please don't go into a marsh with a moose. Not a smart idea.
And and with trading income, you can afford the telephoto lens.
Oh yeah.
Take those shots from afar.
Yeah, 1,000-yard view on that one. Everything's funny in retrospect when you look at it. So.
Absolutely.
Right. Ladies and gentlemen, I highly appreciate you guys tuning in for the morning show here on the trades. Make sure you keep proper risk management. Journal your trades. I am a stickler about journaling your trades. If you have a question on whether or not your journaling is correct or you're doing it the right way or anything, shoot me a DM on there. I'm trying to keep better view of the Discord on there, so feel free to shoot me a DM on there. I'm across all the different social medias except for the Instagram. I do not have an Instagram. I just have a Twitter, Facebook, LinkedIn. That's the only ones that I have on there. And I guess Discord. So you can message me there anytime with any questions with trading or journals or stuff like that, and I'll do the best of my ability to assist with that. Otherwise, I will see everybody on the next one. And yeah, good to go.
All right. Thanks again, man. Have a wonderful day. And thanks for joining us on YouTube, guys. We're going to periodically throw a live one out there for the public, just kind of give people a peek at what's under the hood. I know you guys haven't seen me live on here in a long time. I might do one next week. And then we're pretty much coming back into the group and doing our thing. So check us out. Give us a like and subscribe. We certainly will be putting out lots of different videos on the channel as the weeks and months go on. And I'm doing a weekly thing still every Thursday. I release it at 2 and just basically go through a slew of Jim Cramer stocks and pick the good ones to trade and get them out there. It's more or less a watch list build for me, but a trade idea build. So stay tuned for that. Thanks again for joining us. Be sure to give us a like and subscribe and hit the bell so we get notification of when we're doing something. Thanks again.